So it seems that prop firms are the new promised land for any aspiring trader, right? So everyone dreams of accessing big trading capital. And yeah, it's sort of, in my opinion, also fosters a culture of gambling. And plenty of people find themselves caught up in a loop of taking challenges unprepared and then take them over and over and over again, trying basically to do the same thing all over again, expecting different results. At some point, they win challenges because that's just a thing of, coincidence, let's just say, or just numbers playing out, but there is no method underlying that allows them to actually capture then that opportunity. And it seems like people are so ready to waste a lot of money on these attempts chasing the dream of accessing big capital without having the ability to manage big capital. That's at least my impression that I'm having. And yeah, mate, we know each other now for a number of years, and I know you before you had also now statistical based type of process and in your trading. So you went through the whole learning curve also as you progress through my mentorship or together here. And I just love to hear from you that whole process for you, how it was before, or how did the learnings and the application of my method, let's just say, help you in that? Did it at all? And yeah, what's going on there? I'm just curious to know.
Yeah, so basically, at the end of the day, these prop firms know that the majority of traders are lacking any kind of structure at all, even in a basic sense.
True.
And I suppose if we look back at like where I started, I was one of those traders. I lacked structure, I lacked clarity around what I was looking for, falling into the exact same trap that everyone else is here, believing that, lines on a chart is going to be the path to riches. Okay. And at the end of the day, now knowing what I know, it's not. Okay. It's just not. So
It's a
obviously,
simplification, right? That's sort of, maybe we can just also give the context here. Technical analysis itself is not completely rubbish, but if you execute it all on its own, it actually is.
yeah, exactly. So at the end of the day, what we're looking for here is we're looking for a clear structure around what you're looking for. Like, what do you want to see? How should it move? When does it perform best over other times? And basically, by actually having that edge, by being able to work with the data, you are putting the odds in your favor a lot more and to actually do well in the, let's say, prop trading world. So obviously that was something that I was lacking massively at the start. And then obviously, working under you, I learn a lot more about the data structures and how to work with data and basically be able to essentially clean that data up to a point where you're finding the sweet spots in any kind of strategy if there is one. So it's not just like you're not just being given a strategy, you're given a tool set that allows you to basically pick and choose what sort of avenues you want to go down in this trading world,
Yeah.
and then be able to.
I love to extrapolate on that point because I think it's very important. One part is the strategy that you're executing, and that strategy has a statistical relevance in the patterns and the combinations that it's trying to capture from the market. The more, or when you have a certain structure, the probabilities of that structure to have a certain outcome increase. Whereas if you only have one of these metrics in place, the probability of that to be not random are basically zero. And but another aspect is that you also need, on top of that, a strategy that works for you. And that's really important. When you learn a strategy from someone else and try to copy that strategy, there are a million ways of why and how that strategy can be inconsistent with your own perception, with your own abilities, with your own lifestyle, with so many things. And if you don't think about these things, then you will simply fail. And that's another thing, because on these prop challenges, you are very much under pressure, right? So you have, especially in the challenge part, you need to have certain rules must be in place, right? Some of them even have like time restrictions, trade type restrictions. How did you deal with that to make it match in a strategy that worked for you?
Yeah, so I think the big eye-opening part for people is when it comes to prop firms is especially the challenge part is a whole different way of trading compared to how you'll trade when you actually reach that funded live account.
100%.
You have to be a lot more aggressive. and realize that at the end of the day, you're looking for a strong sequence of trades during that challenge period.
Yeah,
Majority of challenges are looking to make, 10 to 15% in a short period of
which is
time.
a lot. Yeah.
Exactly, which is a lot. So you have to be aggressive in your approach. So in a way, yeah.
Now, I was going to say to explain that also in simple terms for everyone. So, if you have a strategy that has a statistical edge, so you essentially know a certain percentage of trades usually work out. What you don't know is the distribution of these trades. Are the next 5 trades going to mirror that, or the next 10 trades, or the next 3 trades? You never know that. So, you will never know that. So, your best way to attempt to win a challenge is that still go with a strategy that has a statistical edge to it, but in the challenge phase, trade it with a higher risk, because when you lose a challenge. But when you win, let's just say a sequence of trades, what you just said is like basically you win 1, 2, 3 trades, then you stop trading. And you just capture the win of the challenge. And then as you go into the real then funded account trading, you switch. Why do you switch? Because now it's about keeping that account alive. It's not about like getting over that hurdle. That those are 2 different disciplines that people need to understand exist in the first place, right?
Yes, exactly. Because a lot of the time as well during the challenges, people are blowing these accounts up and stuff, which is going to happen anyway. It's a result of higher risk and tight rules. But people are getting very anxious and things like this. And at the end of the day, majority of that anxiety will actually be solved through having clarity around what you're looking for. If you know your data and what is driving what you're doing, you're going to have a much easier approach with coming to terms with these losses or periods of drawdowns, or even being able to, continue to operate during periods of winning when this is where you do want to take the challenges, when you're really at your best.
Right.
So even,
So
this
in a
anxiety.
simple way, if you have a trend following strategy and we have a strong trend going on, you will be more able and willing to get to capture that more than whereas if you are in a ranging market and you have a trend following strategy, you will rather understand that this is not the time to overdo your risk necessarily before everything that solidifies a trend in place is in place first. And so those are nuances that you absolutely need to be aware of. Also, what is it that you're actually trading in the first place? If you don't know what you're doing, then you will not be able to replicate it or to bring any sort of consistency in the results to it. That's why we use probabilities, data, statistics, right? And that's the approach that essentially, or if I understand correctly, was a big missing aspect in your trading before you came to me in a way, right?
Yeah, for sure. Like that's at the end of the day, that's the missing approach for 99% of these losing traders out there. It's always
I
some
agree.
sort of lack of clarity, or they're just learning the wrong information, or they have so much information they don't know how to structure it in a
Fatigue.
way.
Hmm.
Exactly, and that's, multiple options lead to a lot of anxiety. And a lot of the time we actually just need to bring clarity to these questions. And the one way to do that is by actually collecting and working with the data.
Yeah, I love that. So I think the quick takeaway is that prop firms per se are something good for someone that has no ability to access capital, to build yourself up, to like accumulate some money in the first place. So absolutely, when you're starting from zero, but taking challenges without having a proven strategy with a statistical edge and the ability to execute it so that you prove to yourself that you're able to put it into action as well. So there's 2 pairs of shoes again here. That's just foolish. And I encourage everyone, why not try to capture the good of the phenomenon prop firms and really scale yourself up, access trading capital, make a load of cash, then maybe even move to your own account better, instead of trying to gamble for that one lucky shot that you will have a big 6-7 figure account. And what are you going to do when you have that account if you don't have the preparation to really then manage it correctly? You were hoping that, let's just say, your lucky shot is going to be repeating again so that you can get a payout. Maybe it happens to a very, 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 very small portion of people. And what I always like to say, and I think that's one of the first things that my boss at the investment bank put in my head, you need to differentiate between Is it possible? Yes, but is it probable? How much? And if you cannot
Well said.
quantify that, then you're doomed. You're just gonna, yeah. At some point, Murphy's Law, we all heard it. Whatever can go wrong will go wrong, and it will go wrong in the most bad way for you. That's also something that's why we built these systems and fail safes, and and even that can flip-flop on the prop firms. We've seen a bunch of prop firms go broke as well. So you had also your experiences, right? So that way you had your nice six-figure prop firm account, and then overnight the company stopped operating, right?
Yeah, for sure. And this is as a result of just poor management on their end, not completely understanding the industry. And a lot of these individuals would have actually had mentorships themselves, and built a strong following around that. And it just shows how important it is to actually go under someone's wing who has this real institutional brokerage experience. You have to get a mentor who knows what they're talking about. Even the same with these prop firms, you have to be working with prop firms that actually have a real background in this game, not someone who just started from their parents' bedroom and said, let me,
Yeah.
try this out. And that's unfortunately what's happened to a lot of prop firms out there.
Yeah, because when prop firms came up, it seemed to be the perfect way to make money. You just give people demo accounts, they pay for the demo accounts up front, and you just drive Lamborghinis. But at some point, what happens is that when some of your traders start to win money, more money that you're getting in, then you go bust, you go broke. And that's essentially, it's called risk management. So what I'm trying to say is that risk management does not only exist on the trading side for us as traders, but also on the operator side, the prop firm, the brokerage, the hedge fund, the bank, even though they have so many more influences in what actually constitutes their real risk in total, because they have different customer flow and their own positions and stuff like that. But nonetheless, most of these unsophisticated prop firms that are just came out of nowhere from a following of some Instagram guy, they lack the professionalism, the risk management, the operational robustness and experience, all of these things. And as people became more capable in their trading approaches, yeah, these companies also, a lot of them went bust, and they take your money with them. So it's really important, whether you develop a trading strategy, whether you're trying to become a successful trader, or even on the business side of things, if you don't know your data, you don't understand your details, you don't know exactly, the ins and outs of what is being done there, then it's only a matter of time before one wave's gonna, yeah, kick you out of the game. And my wish and my hope with this content that we're creating here is that we help people understand that there is a seriousness to this that is necessary in order to win long term, not with a lucky shot sort of thing. And I understand that might sound less sexy and takes more time and takes more effort, but guys, there is so much money out there in this world. So much. You have no idea, no clue how many billions and trillions of money is out there. All you need to do is have a certain amount of consistency and ability to take a little bit out of it. Obviously, there are people that with taking extremely high risks are able to make $1 million or maybe even a couple million in a really short amount of time. But usually a lot of these guys, they lose their money very quickly again, because there was never a method or an ability to that, or they make bad investments afterwards, or they get scammed afterwards, or any of these things. So your ability and capability should be always at the forefront of what you are doing. If you are not the best version of yourself, literally, someone else will take your money. Yeah, I guess that brings us to the end of this section here. And so, yeah, guys, we will talk about a bunch of more content. If you have anything you want us to talk about, share about, our trading experience, maybe also stuff I lived through in the investment bank, the hedge fund space, at the brokerage, all of these things, then, yeah, use the comment section. And yeah, we'll see you on the next video. Thank you.